Well, the stock market is attempting to rebound today after sliding this week. Investors are concerned after stocks continue to slump, which started Monday and culminated with an especially dramatic drop yesterday. The Dow closed down over 800 points on Wednesday. Here's the latest on Wall Street right now. The Dow, S&P, NASDAQ fluctuated in the first hour of trading, but ultimately turned downwards again. Both the Dow and S&P have suffered their largest one-day slide since February. Yahoo Finance reporter Scott Gamm joins us now to discuss the latest. So what are the main factors driving this?
Yeah, I think the main concern right now is higher interest rates, and that's because the Federal Reserve keeps raising interest rates, much to the disappointment of President Trump, as we've seen him say over the past couple of days. And the reason they're raising interest rates is the economy is doing better, right? I mean, if you go back to 2008, the Fed put interest rates at near zero in an effort to stimulate the economy after the financial crisis. Now that the economy is doing better, they're saying, okay, we don't need to have those crisis era interest rates anymore. We don't need those training wheels. We can allow the economy to stand on its own 2 feet.
Earlier, the president criticized the Federal Reserve. I want to play that bite for you, Scott.
I think the Fed is out of control. I think what they're doing is wrong. Under the Obama administration, you had a lot of help because they had very little interest. You know, when you talk about economies, our economy is far better than that, but we're paying interest, and they weren't. They were using funny money. But I think the Fed is far too stringent, and they're making a mistake, and it's not right. And it's despite that, we're doing very well, but it's not necessary, in my opinion. And I think I know about it better than they do, believe me.
Should the president be weighing in on interest rates like that?
Well, look, I mean, the White House says the president is not pressuring the Federal Reserve. President Trump picked Jerome Powell to replace Janet Yellen. It's interesting, a lot of market commentators are saying that Janet Yellen, if she was still the Fed chair, would not be raising interest rates as fast as Powell is. So it's an interesting dynamic. I think the president obviously has touted the success of the stock market, which is, largely linked, especially in recent years, to his election. I mean, you almost have to give him that. But I think now he might be looking for some sort of a scapegoat. In case stocks do fall, he can blame it on the Fed.
Global markets we've been watching today have been tanking a little bit, suffering a little bit. Some analysts say that this could potentially be because of the trade war with China. What's your read on that? Yeah,
I think that's part of it. I think the strength of the dollar this year has been another huge reason why, especially emerging markets, have declined their stock markets, and that's because a lot of emerging market countries have debt denominated in dollars. And so if the dollar rises, it makes that debt more expensive. Now, why is the dollar rising in value against other currencies? Because the Fed is raising interest rates. So you can really link any of these market movements back to the Federal Reserve. That's how powerful they are.
Should investors be worried at this point?
I don't think so. I think, obviously, anytime we see an 800-plus point drop in the Dow, which is what we saw yesterday, you never like to see that. No. But keep in mind, stocks are still positive since the start of the year. I like to follow the S&P 500, which tracks 500 stocks, so it gives you a broader look at the market. As of yesterday, we were still up 8.6% year over year in the S&P 500. That's, a pretty decent return this late in the bull market cycle. So if anything, a lot of market participants are using this as a buying opportunity to put some more chips on the table, especially for investors who have been sitting on the sidelines.
Scott Gamm, thank you for joining us.
Thank you, Rena.
You bet.